Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. We had a couple of client update luncheons last week, and they went quite well. We had a lot of clients there, I think about 120 in total. Generally speaking, I talked a lot about the economy. I talked about the economy being fairly strong. I talked about the labor market that has been fairly strong. We've seen a slight uptick in unemployment claims, but nothing drastic. Remember, if people are working, they're spending money. There's been all kinds of rhetoric and talk from the big Wall Street firms, banks, and insurance companies for over 2 years now, mind you, over 2 years, about this big bad recession and a big stock market collapse over 2 years. And if you listen to this rhetoric repeatedly and you follow the rhetoric of these big firms, not only the last 2 years you would have suffered horrendous realistic returns, but that's how it's been for years and years and years. So remember, what Wall Street spews out is what Wall Street wants to spew out. The more emotional they get investors, the more changes you make to your portfolio, and the more money Wall Street makes. Remember, no Wall Street firm, bank, or insurance company is a fee-only fiduciary money management like a Rezny Wealth Management. So what does that really mean? It means they don't legally work for you. They just spew out this information and regurgitate the same information over and over. That really is worthless information. It isn't going to help you really make any money. So at the end of the day, one of the things I try to explain to every client, volatility is normal. You have to expect it and you have to accept it. It's normal. I see the end of the year being decent, and I talked about that a few weeks back. We had, kind of this general 10% correction from the highs. Things are down. They seem to be recouping. The economy is growing. GDP's been good. The unemployment numbers, again, are within realistic numbers and in check. So people are employed and they're making money. Again, as long as people are working, they'll spend money. Now, if things change in the next 1 month or 3 or 6 months with the employment scenario, of course, we'll make adjustments as we see fit. But we don't see the economy going into recession this year. So again, Wall Street's wrong again. We don't see a recession next year. We have some slowdown a little bit, sure, which we're seeing in general. Because again, a lot of the stimulus money's been spent and inflation is abating in a great way. They had the Fed meeting last week and they did not raise rates again, which is what I've talked about. I felt they would not, and I think they're done with the cycle of raising rates. If anything, we're looking for them to start reducing rates if the economy slows in any meaningful manner. And we're seeing that rollover of inflation. We're seeing unemployment generally strong, but a little tick up in claims, but nothing drastic at all. Companies are making money. So if I look at the earnings reports that have really come out in the last 6 weeks or so, they've been pretty darn good in general. And what that tells me is that if companies are making money, the consumer is employed, the economy should keep rolling. Now, I will say that's the U.S. If I look outside the U.S., we're seeing more slowdowns, more countries that are in mild recessions right now because, again, generally bad policy. Now, while some of the political policies in the U.S. are not great, and I know a lot of you get frustrated with these, we're still the cleanest shirt in a dirty basket of laundry. I know that's a bad way to put it, but we want to be invested in the strongest economy, which we continue to be the strongest economy. We're not invested international right now. We do look at these things, but we're not going to invest in areas that really are weaker than the U.S. on a growth potential and really create more volatility and risk. So again, we've made a few adjustments to our client portfolios over the last month. We have a few more adjustments probably before year end. As always, if you have any concerns about your portfolio, if you have any questions, please do call the office, schedule a phone review or office review, either one. And as always, we appreciate your business, your trust, and your referrals. Think about us if you're talking to a friend, family member, or business associate. Our business does grow through quality referrals like you. Again, we appreciate your business. Give our office a call if you do have any questions or concerns, and have a safe and profitable day.